recent data shows Nigerian investors are rapidly reallocating capital into local financial assets, with Naira-denominated mutual funds surging about 140% over the past year. Similarly, the Nigerian debt market witnessed a surge in investor appetite on February 4, 2026, as the primary market auction for Nigerian Treasury Bills recorded a massive total subscription of 4.59 trillion naira. To unpack this, I am joined by Modupe Arinde, Investment Research Analyst, Meristem Research. Thank you so much for joining me today, Modupe.
Thank you for having me. Good morning.
Good morning to you too. Now, the February 4 T-bills auction saw subscriptions 4x CBN's offer. What's your reading of that?
I mean, looking at how the previous auctions has fared, I mean, this year we've seen subscription level elevated. However, the February 4th auction, we saw like a significant subscription level, and like you said, about 4 times. Subscription level was about 4 times the CBN offer, and this points to the fact that there is improved investors' confidence in the domestic debt market. Aside from that, investors are also trying to lock in on the higher yields environment before we start seeing the rate cuts, right, in line with our expectation. And apart from these, the excess liquidity also has its role to play, because we had a lot of OMO bills and T-bills maturing. So all of these led to the significant subscription levels we saw in the T-bills auction on Wednesday.
Well, I understand there is that thing about trying to lock yield, especially looking at possibility of rate cuts and the likes. But then, do you see this as a liquidity trap, where money chases safe yields because productive investment options are probably thin, or are investors merely just trying to lock in yields while it lasts?
I would say investors are trying to lock in yields, right? I mean, typically, Q1s are always a period where government tries to front load their borrowings, right? And when this happens, we get to see increase in yields, and because of this, we are seeing why investors are trying to position to lock in on higher yields. Now, I do not say this is because of liquidity trap. It's because investors are basically trying to lock in yields before we start seeing the rate cuts.
All right, let's break this down some more. Now, demand for the 364-day bill was more than 5 times the offer, but when you take a look at the shorter bills, they were undersubscribed. I mean, I would like you to talk to us about the thinking behind investors favoring longer dated instruments, despite easing yields. I mean, yields declined on those, on that particular one, yet they went for it.
Yeah, so typically, the longer dated papers used to have the highest yield, right? So investors would typically want to position in order to maximize their return. So that is why we saw, but because of this significant subscription level we saw on this 365 on this longer dated paper, the 364 days paper, that's why we saw the yields decline, right? So basically, investors prefer to maximize their return, right? They would rather invest in the longer dated paper for a long period rather than to invest in the 3 months paper and the 6 months paper. It's just basically to maximize their return, basically.
Well, we saw what the CBN did there, and you also talked about it. It had to lower the stop rates to 16.98% from 18.36% because of the volume. Now, do you expect this trend to continue in future auctions?
It's a two-way thing, right? It's a two-way thing. So if we continue to see this level of subscription, right? If we continue to see this elevated subscription level, then it's very likely we'd see rate cuts. And then it also depends on the MPC's decision. If the MPC decides to cut rates in the February meeting, then it's very likely there is high possibility that we might see rates might further decline rate might further decline. However, if you consider the government, if you look at the 2026 budget, I mean, the deficit is about 23 trillion, and this points to the fact that the government still needs this borrowing. There is sustained need for government borrowings, and the only way they can do, not the only way though, but the major way they plan to go about this is through domestic borrowings, right? And the investors already know this, and they would want to like demand for a premium in order to incentivize investors, right? So the government would not want to cut rates too much, right, in order to incentivize investors, giving their their elevated borrowing needs. But if we continue to see this level of subscription, and if CBN decides to cut rate, there is high possibility that we see a decline in rates, but maybe marginally.
Well, there are concerns around, alternatives. That was why I asked you if it's as a result of a thin market where they have just that particular option, and there's also the concern about the federal government crowding out the private sector. What's your take on that, rather?
Sorry, can you come again?
But I was talking about the fact that on the one hand, there are talks about, maybe there are no alternatives. That's why people are piling into that. And then on the other hand, you have the talk about, crowding out of the private sector. What do you make of these thoughts?
I don't think and why I understand that T-bills and all the money market instruments are very safe assets. So we can say this is one of the reasons why we are seeing these significant subscription rights. And considering compared to the fixed income market is relatively less risky compared to the equities market. So that is why we are seeing this level of subscription, and also to benefit from the high yield environment.
All right, let's turn our attention to the surge in Naira-denominated mutual funds. What do you think is responsible for this? We saw 140%. Talk to us about this.
This is quite impressive, right? And I can say it's majorly because of the macroeconomic conditions. This macroeconomic conditions in 2025 was relatively better compared to 2024, as well as the high yield environment. In fact, if you look at the composition of the mutual funds, right, the Naira-denominated mutual funds, we see equity mutual funds, we see money market mutual funds, and all of these two did extremely. They did over 100% last year. And for the equity mutual funds, we would say that's a result of the stable macroeconomic conditions. I mean, inflation figures are easing, exchange rate is relatively stable, and so factors like these boosted investors' confidence. So that's why we saw significant improvement in the equities fund. And then for the money market funds, we saw significant. Rates are still relatively high, so that is why we saw the impressive performance in 2025. Which is quite higher than the dollar. Compared to the dollar-denominated funds, the Naira did extremely well last year, and I would say as a result of the relatively stable environment, which impacted companies positively. Exchange, like I said earlier, exchange rate did well, was relatively stable. Inflation figures. Inflation was trending lower, and GDP was great. So factors like this led to the improved sentiment, the improved performance in the Naira-denominated mutual funds.
Well, do you see all of this continue? This particular trend, do you see it continuing, considering the factors that are responsible for it?
Yes. Looking at how the market has played so far, take a look at the equities market. Market has done about 9% year to date, right? And this is majorly because macroeconomic conditions are stable. FX environment is currently stable. FX is currently trading at about 1,366. Inflation figures around 15.15%. So all of these factors are improving the operating environment for companies, and then investors can position in these companies and higher dividend yields and all. And then considering the fact that there's still high, the interest rate environment is still relatively high, right? So this in a way would influence how investors would, even if you see a rate cut in the near term, it might not be, yields environments will still be relatively high compared to other economies, right? And because of this, we expect to see continued positive performance in these in these Naira-denominated funds, all things being equal.
Let me close on this. I mean, we're talking about the Naira, right? The Naira edged lower on Thursday. That was yesterday in the official foreign exchange market. I mean, that was a retreat from a 10-day rally. And that was because we saw renewed demand for dollar, which weighed on the currency. Do you think we should be concerned, or it's just, one of those things?
I do not see a reason for concern. Basically, I really do not see. I mean, looking at where we are coming from, in 2024, 2025, dollar was around about 1,500 levels, but now we are around 1,366. It just shows that something positive is happening, because we have a day, depreciation does not mean we have to it does not give room for worry, right? And the major reason for this this depreciation is basically as a result of, FX related demands, and not necessarily, but looking at our external reserve is still very strong, about $46 billion rather. So that means that the CBN still has enough to intervene in the FX market. So I do not see a reason for alarm, actually, because we are, compared to where we are coming from, where we are in a good place, actually, and we see the government still has, the CBN still has enough to intervene in the FX market.
All right, Modupe Arinde, Investment Research Analyst, Meristem Research. Thank you for sharing your thoughts with us.
Thank you so much for having me.